It's time now for Hot Picks here on Morning Markets on BNN Bloomberg. Today we're focusing on European stocks, and we're joined by Joshua Mahoney, Senior Market Analyst at IG. Joshua, thanks a lot for joining us. The state of European markets is getting more and more attention in this part of the world, with the FTSE 100 in all-time record high territory and the CAC 40, the DAX index in respectively France and Germany, not too far off their peaks after a very difficult 2022 for the most part. First of all, what's your take on the strength in European markets?
Hi, Paul. I mean, personally, I think it's on borrowed time, quite frankly. You know, we have seen, certainly in the UK, this big outperformance for the FTSE 100. A lot of that has been down to the fact that we have been seeing this move in terms of the currency markets. And generally, you will see the likes of the FTSE 100 really saved, certainly by the weakness, by the declines that we see in the pound. And certainly what we're seeing today is a perfect example of that. FTSE 100 not necessarily doing too bad, but European markets really taking a turn lower. And I think this has all got its footing in what happened last week, from the Federal Reserve to the ECB to the payrolls figures. Markets really don't necessarily know how to take any of these signs of economic strength. We're seeing the same kind of thing today in terms of the Canadian jobs numbers. Relative strength not in terms of US and Canadian jobs. But is that a good thing? Does that just mean central banks can stick to their word and continue to hike rates, and we can just see elevated rates for a longer period of time? Maybe you need that contraction to actually see the central banks really focus on needing to bring down rates as soon as possible.
Okay, one reason the FTSE 100 is trading at near records is that, like the Toronto Stock Exchange, it has significant representation from mining stocks. And in fact, your first pick today comes from the world of uranium, and it is a company named Yellowcake. Tell us about Yellowcake.
Yeah, I mean, look, ultimately, if you're talking to someone in Canada, you've got a whole wealth of options in terms of the uranium space. The Sprott Physical Uranium Trust is one area that is particularly interesting because they essentially just stockpile uranium with each piece of investment that goes in. Yellowcake is similar in that it buys and stockpiles uranium when people want to buy in. We just saw them doing exactly the same recently. This, for a UK investor, is our best bet in terms of getting into the uranium space. And for me, I think this is a market that, yeah, it may not necessarily pop in the next week or the next month, because timing is very difficult on this. But for the outlook in terms of how everyone's going to transition towards being able to cut emissions, when certainly the likes of wind and tide and the like solar isn't necessarily ready to take on that mantle. Everyone seems to be transitioning more towards the nuclear space. You're seeing it just over the past 24 hours with Japan choosing to elongate the shelf life of some of their nuclear power stations. So quite when that pop's going to happen in terms of the uranium price, that remains to be seen. But I feel relatively confident that we will see that pop over the next year or so. And so certainly Yellowcake and a number of different mining options that you have over in Canada look particularly attractive for investors at the moment.
Okay, let's move on to the airline sector. Another sector getting a lot of attention as air travel picks up around the world. We heard from one of our guests earlier this morning about increasing air travel within and from China, for instance. Your next pick is IAG. That's an Anglo-Spanish multinational that holds subsidiaries in this space, including, and I didn't know this, British Airways.
Exactly, yes. And this has been a stock that, by and large, investors haven't necessarily wanted to touch too quickly, because the problem is that they're not necessarily a budget airline. They don't just focus on filling seats very cheaply. Some of those seats might be business class, some of them might be first class. And by and large, what we saw as we moved out of COVID was that we didn't necessarily see that same demand in terms of business travel. Now, of course, many of us are still working home for parts of the week, but nevertheless, I do feel like there has been a pickup in terms of demand on that business side. So we're certainly seeing that sort of booster kick in for the likes of IAG. And you're seeing the numbers really looking relatively impressive in terms of some of the airlines recently, in terms of their capacity, in terms of the fact that, certainly they've been through a very difficult period. The amount of debt and sort of devaluation of share price that come along with that to sort of prop up these companies does mean that it's unlikely they're going to get back to where they were previously. But if you're talking about a company like this that's currently around about £1.60, it was previously £6 prior to the pandemic. I think there's plenty of upside to come, because bear in mind, what they need is not necessarily to just constantly put on more and more planes. They need to up their margins. And the fact of the matter is that this rampant inflation that we've been seeing has allowed companies like this to actually really widen their margins without people thinking it's out of the ordinary. As we see energy prices decline, you're looking at costs deteriorating, but they're able to maintain these wider margins and really just hide it under the guise of inflation that we're seeing everywhere.
Okay, we're almost out of time, but we do have time to talk about AstraZeneca, a big pharma company, perhaps became well known to many, many Canadians because it was the AstraZeneca COVID-19 vaccine that first arrived here in Canada.
Exactly. And if you look at who's doing well in terms of earnings seasons thus far, I would say healthcare stocks have been doing particularly well. And look, if you're talking about areas that are relatively protected through periods of potential downturns or recessions, healthcare is exactly that. AstraZeneca has been seeing significant strength in terms of its COVID income, and that's going to decline. But they still have a big focus on oncology going forward. If you look at the past 10 years, 9 of them have seen upside in terms of the share price for AstraZeneca. So for me, I think it's one of those stocks that will continue to outperform, despite the fact that at the moment people are fearful around what might happen if we see markets turn lower.